Welcome back, fellow investors and enthusiasts. In today's video, we're diving deep into the fascinating world of precious metals. I'm thrilled to share with you an intriguing perspective on an asset that's often overlooked, but holds tremendous potential in our uncertain times. So, grab a cup of your favorite beverage, sit back, and join me as we explore the untapped power of silver and gold. Have you ever wondered why silver, a commodity with immense industrial value, remains surprisingly underpriced? Or why gold, the timeless symbol of wealth, plays a critical role in protecting your financial future? Today, we'll unravel these mysteries and shed light on how these precious metals can act as a shield against the flaws of the fiat currency system. But before we delve into their modern significance, let's take a fascinating journey through history. From the days of Sir Isaac Newton, who fixed the ratio between silver and gold, to the Roman times when Diocletian's Edict of Prices shaped the monetary landscape, we'll uncover the intriguing past that laid the foundation for the present-day value of these precious metals. Fast forward to today, where we find ourselves in a world of fluctuating economies and fragile financial systems. It's become evident that the ratio between silver and gold has reached intriguing levels. But what does this mean for investors and those seeking stability amidst uncertainty? Stay tuned as we unveil the potential of silver and gold as both an investment and a safeguard against the impending collapse of fiat currencies. Furthermore, we'll explore the practical applications of silver and gold in our everyday lives. Imagine having a tangible asset that not only preserves your wealth, but also acts as a form of small change when traditional currencies falter. And let's not forget the importance of supporting our loved ones during challenging times. Silver, in particular, proves invaluable as a means to help our families and close friends navigate the uncertainties that lie ahead. As the world inches closer to a potential financial reckoning, it's imperative to seek alternatives that can shield us from the consequences of a collapsing system. Silver and gold are not just shiny metals. They represent an escape route, a means to protect our hard-earned assets, and provide a secure future for ourselves and those we care about. So, my friends, whether you're an experienced investor or simply curious about the world of precious metals, this video will provide you with insights that can potentially reshape your financial strategies. Get ready to unlock the hidden power of silver and gold and embark on a path towards safeguarding your wealth and embracing a brighter, more resilient future. Don't forget to hit that subscribe button and ring the notification bell to stay updated on all things precious metals. Now, let's begin. One valuable asset that cannot be confiscated is silver. Surprisingly, silver is currently undervalued as a commodity. While other resources like lithium may experience significant price increases, silver tends to fall. This contradiction is nonsensical. From an industrial standpoint, it is prudent to accumulate silver. Additionally, if access to legal tenders such as gold is restricted, silver becomes a viable alternative. Interestingly, during the time of Sir Isaac Newton, the fixed ratio between silver and gold was approximately 15.5 ounces of silver to 1 ounce of gold. However, in Roman times, Diocletian's Edict of Prices established a ratio of 6 ounces of silver to 1 ounce of gold. Presently, the ratio stands at around 80-something. Considering this, silver holds potential as an investment when compared to gold. However, it is important not to view it solely from an investment perspective. The primary goal should be to minimize risk, which includes avoiding fiat currencies and assets tied to them. By holding physical silver, one can safeguard against the flaws and manipulation within the current system. In times of crisis, it is crucial to provide assistance to family and close friends who may not have taken similar precautions. In this context, silver proves to be more useful than gold. Gold, on the other hand, is ideal for larger capital transactions. This was evident during Germany's situation in 1923, where a small amount of gold could purchase valuable assets due to hyperinflation. The expectation is that such opportunities may arise again, allowing the use of gold and silver to acquire physical assets. Depending on the jurisdiction, it may be necessary to hold legal tender, such as sovereigns or other gold coins. Therefore, gold remains a valuable resource for capital transactions, while silver serves as an essential medium for day-to-day transactions. The main advantage of holding physical gold and silver is the ability to detach from the fiat currency system. As more people become aware of the potential collapse of this system, the importance of owning these precious metals grows. When the fiat currency system eventually crumbles, physical gold and silver will retain their value and can be utilized for essential expenses. Based on the premise that silver has a substantial gap to bridge compared to gold, it is unlikely that silver will ever reach parity with gold. The only potential solution would involve fixing fiat currencies to gold eventually, although the specific conversion rate is uncertain, whether it be in dollars, pounds, or any other currency. I envision a scenario where 1 ounce of gold could be worth £1 million. But this isn't meant as a suggestion to profit from buying gold. Rather, it signifies the impending collapse of the sterling as a currency. The method by which this transition would occur is unknown, but it is necessary to establish a fixed exchange rate between fiat currencies and gold to ensure a widespread distribution of a gold substitute across the nation. Similar situations have taken place in history, such as when Hong Kong reintegrated and introduced a new Hong Kong dollar based on a currency board system, with a conversion rate of 5,000 to 1. The value of the Japanese military yen was irrelevant. The goal was to distribute it throughout the economy. I believe this is the eventual outcome we can expect. The time frame for reaching this outcome remains uncertain. However, I anticipate gold will be the metal that establishes a fixed exchange rate, transforming paper currency into a substitute for money. Considering that silver tends to rise at about twice the rate of gold when the price of gold increases in fiat terms, it would be wise to view this as a favorable starting point. Later, it may be advisable to switch back to gold when the gold to silver ratios decrease, for example, to around 30 to 1. This strategy would enhance the value of physical gold in your possession compared to your initial investment. What interests me is the possibility that once nations start settling their international trade using a stable form of currency tied to real assets, it becomes less challenging for them to attach their domestic currencies to the gold price. This prospect gives me great hope that this system can succeed. While I wouldn't recommend having the majority of your physical gold and silver in silver, allocating around 30 to 40% to silver would be sensible. This strategy aims to maximize your resources during the transitional period when silver is expected to catch up with gold. That is all we have for you today. Kindly like and subscribe to our channel.